Hey everyone, it's Spencer Janke, Berkshire Hathaway Real Estate Team Utah Cribs. Hey, just wanted to do a quick update just in regards to what is actually going on in Utah's real estate market, economy, the financing side, just kind of everything. Obviously, we're getting a lot of inquiries from our past clients, friends, family, everybody, just in regards to like what is going on in this crazy market. I'm starting to hear people even saying, hey Spencer, maybe I will wait, hold off for a year. And believe me, I understand why. Right now, I'm averaging like my typical buyer that is trying to buy a home. I'm telling them to anticipate offering on 10, 20, 30 potentials to actually get one home under contract, which that is a very frustrating process. That is, it's very, very difficult right now just to keep people motivated and all of the above. But let's just talk about a few things. The one thing that I want to talk about really, really quickly here, and number one, I am not like the know-all. I do not have a crystal ball or anything. I can only go off of like what are the facts that are actually going on in the market, and I can go off of my almost 20 years in experience as a real estate broker. I've seen the trends before. I've been in markets that are up. I've been in markets that are down. And what's interesting is, guess what? People always come out on top if they look at real estate from a long-term perspective. The only time it actually gets scary is when people are trying to flip properties. So, all of the HGTV, those people can get burned for sure. But let's talk about what I personally think is going on. Number one, inflation is real. I think we all can agree that we, as a country, we have been printing money, and look, doesn't matter what our own opinions are politically, all of the above, but right now, money is very, very easily accessible. And because of that, there's a lot of money in the market, and we are seeing that on a local level, more so than I ever have in our real estate career. But let's talk about inflation. So right now, interest rates are very, very low. For the sake of this little video, let's say in between 3 and 3.25%. Now, to keep the economy moving forward, the Feds have purposely kept those interest rates low. Well, now that the big red flag is waving that like, hey, inflation is real, the way that they're going to combat that is by raising interest rates. Now, no, I don't think that the Feds are going to jack up interest rates super high and then all of a sudden we're all like screwed. Now, that's not going to happen. But I think it is very, very safe to say that we are going to for sure be between 3.5% and 4%, maybe even 4.25%, probably sooner than I would like, but it's probably coming down the pipe. So does that mean this year? Probably not. Does that mean next year? Yeah, most likely. I think as inflation continues to be a real issue, the Feds are going to be forced to do something with interest rates to keep that at bay. So think about it, for a moment. Let's talk about that. What will happen when interest rates go up just to 4%? But let's use 3% right now as the benchmark. If you have if you're going to purchase a home in the $500,000 price point and you're at 3%, but the interest rates go up to 4%, your buying power is going to go down roughly by $50,000, $60,000, $70,000. So if you were in the market for a $500,000 home at a 3% interest rate, and then all of a sudden interest rates are at 4%, yeah, that's going to be about a $50,000 swing, which means that you might actually be priced out of the market just because of interest rates. Now, people immediately will say to me, well then, okay, guess what, Spencer, that like if interest rates go up, then the markets will probably calm down, maybe prices will also fall. Not saying that that's impossible, but I'm going to say it's very, very unlikely. And why is that? Let's talk about another trend that we're seeing, and let's call it. I'm gonna take a play out of a good buddy of mine from back east, who is a great friend of mine, a real estate broker. He did a good video that I really, really liked, and I'm gonna take a few cues from him. But basically, what he was talking about essentially is the household formation. And what do I mean by that? Meaning now we live in a world where it's more important that people actually have a home in an area that they can work in. So we're seeing a lot of people coming from back east, California, that are moving into the state, And they're moving here because of quality of life. They want to be by the mountains. They want to be skiing. They want to be mountain biking. I know this because all these people are coming into the state, and now I have that many more mountain biking buddies. I have that many more people that I get to ski with, and I'm really, really excited about that. As you all know, that I'm like a total junkie for this kind of stuff. But my point is, people are making decisions on housing because they're going to be living and working in those homes. Now, some of you know my opinion on that. I definitely think that that's probably going to shift a little bit. I do think we're going to see a lot of people going back to the office, because I don't think that long term that's going to be, the carte blanche for all types of businesses, but it definitely is going to be the new norm in a lot of industries. So I think that is going to be a big factor. The other thing is like we are seeing, and I've talked about this before on a lot of my videos, we're seeing the average size of homes continue to decrease. I think that is very, very applicable to especially the millennials, as well as a little bit of Gen Xers. I.e., we don't need the 6,000, 7,000 square foot home our parents had or our grandparents had. We don't want to pay the taxes. We don't want to pay the utility bills, but we do want the nice areas. We want the convenience, those types of things. So let's talk about that for a minute. Think about it for example. At KSL.com, just today, there was a big article just about population growth. As you all probably saw, that Utah's population in the last decade has grown faster than any state in the country at 18.4%. So Utah, #1 state in growth last decade. That is incredible. Look, everyone, Utah is no longer the best kept secret. I'm torn about that because I love Utah and I'm a big junkie for the outdoors. And so therefore my mountains are going to get busier. But at the same time, I sell Utah. So therefore it's like, great, rock on. Let's have a good, healthy economy. And we want to share that with other people, prosperity. But what does that mean? Think about it. If we're the #1 state in the entire country for population growth over the last decade, I've talked about how economists have always been saying, and the census report that just came out in 2020 definitely proves this, which is why we have that statistic right there, 18.4%. They are going to release next summer the amount of growth that we saw due to COVID. And I think those numbers will be very, very interesting, as they really don't have any hard data quite yet in regards to the number of people that actually have come into the state in the last 12 months. I'll be very, very anxious to see that statistic. But think about it. Even if interest rates go up to 4.25%, and buying power goes down, do I think pricing is going to drop? No, I don't. And the main reason for that is because of the amount of demand. Now, that demand is real. We are not seeing speculative buying in the state of Utah right now. We're not seeing investors snatching up every property for a number of reasons. The largest one is financing. The banking industry is still being very, very strict. Even through COVID, their guidelines are getting more strict because they want to hedge against their bets. So therefore, that means all these buyers that are buying properties, that are even bidding them up, they're real buyers. They're putting real down payments down, meaning they are not going to walk away from those homes. So that means values are going to stay protected and solid for a long period of time. Now, let me go back to demand. If we have this huge, massive influx of people coming into the state, guess what? A lot of these people actually are making really good money. And I would argue a lot of them are probably making higher than the average income that we see currently here in the state of Utah. So if they're making more money than the average person in the state of Utah, they're coming from markets that are actually higher than ours. Cost of livings are higher at the back east. California is higher on a standard of living. Utah is definitely more affordable. So these buyers, they come here and they're not only are they pleasantly surprised, quality of life is better, the housing is more affordable, all of these factors, they actually think it's a deal. So therefore, these homes, when I hear a buyer's like, hey, I'm gonna wait for a year. Okay, you can wait for a year, but the demand is not gonna go down, okay? Yeah, interest rates might go up, and that is actually probably a fact. Now, I don't know for sure, but an educated guess would tell me that it probably is going to go up to make sure inflation doesn't get out of control. So your buying power will probably go down. I'm assuming next year. I don't know. But let's pretend that is going to happen. So your buying power drops, demand remains high as people continue to come into the state. So therefore, essentially, you'd be shooting yourself in the foot. Demand is going to be there, there's going to be plenty of buyers to buy that property in a year from now, but yet now interest rates are higher and therefore you can't purchase. That is where I see the next 12 to 18 months going for the state of Utah. And I can't stress that enough. People don't realize, and I know even we all get busy in our lives, but when I say I'm dealing with more out-of-state buyers right now in my career than I ever have, and I've been doing this for almost 20 years, that is very impressive, and my entire team is doing the exact same thing. And that, I think, right there is proof and proof. I mean, look, guys, buckle up. I mean, Utah is going to continue to grow. You've heard me say this. It's going to double by at least 2050. Really, I think it's probably going to be sooner than that. But what's interesting that, like, even on the KSL article, they didn't mention that a lot of the economists believe that a majority of that growth, or a large part of that growth, is going to be front-loaded. Now, what does that mean? Meaning sooner rather than later. I think it'll probably taper off as we get closer to the 2040, 2050 range. So if we're going to double, we're roughly 4 million people in the state of Utah. If we're going to have 8 million people in the state of Utah by 2050, but a lot of that growth is going to be front-loaded, yeah, that means the demand for housing is not going to go anywhere. If anything, it's probably going to get even more stiff competition. Compound that with higher interest rates, yeah, your buying power is going to go down dramatically, and I think that will be very, very frustrating for a lot of buyers. Again, I don't have a crystal ball, but that's kind of what I'm seeing in the market right now. It's very, very frustrating for especially like more of the affordable housing realm. I just offered on a condo the other day for a client of mine, and oh my gosh, more than 28 offers on the property. It got overbid by $50,000. I mean, it was crazy. But at the same time, those are all real buyers. I mean, it's a condo. It was $285,000 condo. And there's very, very few affordable housing type properties on the Upper East Bench, which is where this property was located. And so therefore, there's a lot of people that are standing in line that are willing to pay that money. So think about it. Yeah, if you're in the market, I definitely would make a move. I'm just going to end on this. If you guys have any people that are looking to purchase or sell, by all means, let me know. Love to help them out. At the same time, let us know if people are we've got some creative things going on right now. We've got some really fun products that we can actually do bridge type loans to essentially help people buy a property in cash before they sell their current home. That's a big concern right now. I have a lot of people that are wanting to upgrade or downsize or whatever, but they know that if they sell their home, they might not be able to buy another one. So what we're doing right now is we're actually bridging that gap, i.e. we'll help them purchase the new home before they sell their existing home. So we can do that. Again, this is in this market, we're getting creative with how we help people and manage this stressful process as much as we possibly can. So anyway, I thought you all would enjoy just a little bit tidbits of my insight. Again, I don't know everything, but I do like to pretend that I'm pretty good at what I do. So anyway, hope you all are well. Take care. I'll see you guys on the trails. The mountain biking trails are freaking awesome. So hit the trails. They're incredible this year. So I'll see you soon. See ya.